Okay, hello everyone. I'm Andy. Okay, and today we have Darren with us.
Hello everyone, I'm Darren here.
Yeah. Okay, so today what we're going to talk about is Singapore Airline a good dividend stocks for retirement?
Okay, because I have a lot of clients actually constantly call us because lately SIA got the right issues. It become a very hot topic. A lot of people ask me can I buy SIA or not. And I think today we'll share more of our view on SIA.
I think most importantly is the objective. Okay, what is the person's intention? Okay, so whether he want to buy for retirement, whether he want to buy for speculation, whether he want to buy because it's cheap, okay, or any reason, or because some people they want to buy, right? Okay, or because it is the country's pride, right?
Yes.
Yeah. So because
and our government say they will not let SIA fail.
Yeah. So we trust our government. Yes. Okay. So we trust that, the government will help. Okay, government will help as much as they can. Okay. So over here, let's focus on people who are going to retirement. Okay, going to retire soon. Okay.
Yeah.
So Darren, you are our retirement specialist. Okay. Okay, and you always look at dividend stocks, right?
Yes.
Yeah. So what are the things that we want to look at when it comes to like retirement first? Yeah. Let's say when we retirement, what kind of stocks that we want to look at?
Okay. When it comes to retirement, we always advocate something called dividend income, but we advocate is multiple source of income. Okay. So stocks is definitely come out to be one of the source of dividend income that a lot of retiree wants. Okay. So when you look at stocks that are coming for dividend, you must look at their dividend stream for the past few years. Is it very consistent or increasing? Okay. So that's one of the key criteria, because you don't, when you retire that time, then your dividend income this year go up, next year come down, this year go up, next year come down. It become very bumpy. Then your cash flow will indirectly be affected. Okay. So one of the key criteria is the dividend stream must be stable. Okay. That's one of the key criteria on that.
Okay, so if let's say now it's not so stable, but maybe future is stable, is it possible? Or how do we look at like this?
Okay. There's always a saying that past performance is never a guarantee of future returns. Okay, that's a common saying in a way. But past performance indirectly will able to help you to so-called foresee the future result of that. If let's look at two company A, company B. One company A is all the while having giving you consistent dividend, and the dividend have been increasing all the while. And one company B, this year give you good dividend, next year the dividend drop, and the dividend goes swing up and down. Okay, do you think in the future which company would you prefer? Okay, so that's what our criteria we will look at it and expect.
Okay, this is I think the common things that people usually ask. So when we like planning for this a retirement, or we're looking for like dividend stocks right now, okay, at current circumstances where all the price is actually like has came down quite a fair bit. Okay, what kind of dividend yield is available? Okay, it's available out there, and it's not too low and it's not too high. What's the the consider a good dividend stock? What's the range right now?
Now, actually, have to be very honest with everyone that the dividend yield, what you see now, may not be the real dividend yield. Okay, we have to understand the dividend yield formula is calculated based on the past 12-month dividend based on current price. Okay, so definitely a lot of dividend stocks look like the yield is become very attractive. But do think it's based on the past 12 months. Okay, and with the current market condition, so a lot of companies expect, even good dividends are expected to cut dividends. Okay, so the yield, what you see now, maybe 6%, 7%, may not be really a real yield to you. So we still need to go back to the fundamental. What is the yield they are giving during a normal good time, a stable time, which we talk about? Actually, 3 to 4% is quite reasonable for dividend stocks.
Oh, okay. So I understand, Darren, you have this like a lifetime income mastery course, right? So this lifetime income mastery course, will they like, you know, will you be sharing more on this?
Actually, the course it talk about how you look for good dividend stocks, good dividend, good REITs, and even good unit trust. They're able to give you a good passive income on when you approaching your retirement or during your retirement phase. So it's more of the selection aspect.
How to select, and you know what's the step by step, okay, to select a good passive income like a instrument, okay, investment instrument.
Yes.
Okay. Okay, let's come back to our this favorite topic. I think the hot topic of this you know, our community.
SIA.
Yeah, it's a SIA, okay, Singapore Airline. So for Singapore Airline, right, what are some of the things that you look out for when you know analyze a company?
Okay, first we look at the revenue of Singapore Airline. Okay, this is just some basic information of Singapore Airline. Okay, first thing we look at how is Singapore Airline revenue over the past 5 years. Actually, they have just announced their result for the final result where they reported losses lah. Okay, we can look at Singapore Airline. The revenue is pretty consistent, 15 billion per year. Okay, but the next question we want to look at, what about their income? Because you can make a lot of money, you can have a lot of revenue, but ultimately it's how much money go to your pocket. That's more critical. Is that? But I look at their net income, it's not really stable. Okay, we put the losses one side, but before the COVID comes in, their income actually 1 year up, 1 year down, 1 year up, 1 year down. It's pretty unstable. Okay, so and then we go down to their dividend itself. You can see that their dividend per share is also pretty unstable. It can from 31 go to 14. Okay, this dividend is adjusted for the right issues. Okay, the actual number is not, the DPS is definitely not this number. Okay, the system actually adjusted because of the right issue. So but the direction is still similar. It can come out, go up, come down, up, down, and now going forward, I think they have losses. They may not have dividend coming for the next few quarters. Okay. So by looking at that, if you ask me that would I buy these stocks for a dividend, by just looking at the numbers, I will not want to touch on this lah. Okay, but on a near terms for short-term trading aspect, then there's another way you look at it already. Okay, another parameter is something called a free cash flow. Maybe I share with you this data from Morningstar. Okay, the past 5 year free cash flow as I since 2005 to 19. Okay, you can see that right at the last line, you can see that SI free cash flow is not being very healthy that for years. It was negative 500 million. Okay, and it started to become positive, but it's only 51 million based on the revenue of 15 billions. Okay, after that, you can see the negative free cash flow is more than 1 billion, 2 billion. Actually, this is quite alarming in aspect. Okay, how can a company continue to operate with negative cash flow? Okay, so this is something that we are not comfortable with SIA. We want it for a long-term retirement aspect. Okay, and let's just look at another part. We look at SIA on a chart basis. Okay, from the chart, I think you all can see that since the before the global financial crisis, SIA went to $20. After that, it dropped to around $10. Okay, and since that it start to bounce up, but after that it will hover around $10 range to $10 to $12 range during the past few years, except until the last 1 to 2 years, then it start to swing. So we also relative to the market. For the past few years, the market have been in a bull run, recovery bull run. Okay, and but we look at SIA share, it never joined the rally at all, and in fact, it started to come down. So this is something to tell us something about these stocks itself, and fundamentally they may have some issue, or their business mode may have some constraint or due to certain competition. So when you look at this, we also would not want to consider these stocks as part of the retirement stocks. Okay, so these are some of the basic parameters we look at a company itself. Okay, you don't need to do very detailed analysis for the first cut. You just need to have a basic understanding. From that, then will just take it out this company away, and we not even want to do further analysis on that.
Yeah, but yeah, that's for like people who are, you know, looking for retirement income. Yeah.
Yes, correct.
Okay. So basically I think those people right now they are busy buying SIA, you know, most likely they are like more for trading and more for maybe, you know, like speculation, more for a different purpose. So when we talk about like retirement income, we are actually looking at consistent, stable,
Yes.
predictable
Yeah, predictable.
dividends.
In a way, it's
Yeah,
predictable lah.
yeah. So it's not too much of uncertainty, right? Yeah.
Yes.
We don't want to bet our like a retirement funds away, right?
Yeah. And
Yeah.
actually, when you come to buying a stocks, we don't really like right issues.
Oh, okay. Why is okay? So why
Okay.
is this?
Imagine you buying a stocks and you want to get the income for retirement. Okay. I got a really life case. I got a client 80 plus already. Okay, he called me. Actually, he just called me yesterday. Asked me what of the right issues of SIA. Well, he had bought 2 SIA shares, 2,000 SIA shares. When SIA is above $10 that time.
Okay.
So now SIA have dropped and call for right issue, giving 3,000 shares. One share is $3,000. Okay, so you need to come on 9,000. Imagine here retired 80 plus years old, and he actually practically surviving on all those dividend income. Now you need to fork up 9,000 just to subscribe to SIA and to average down his cost, and with going forward uncertain dividend. Okay, so this is a challenge for those retirees if they are depending on this so I can get some money back. Yeah.
I see. So it's very difficult for him if he need the money. Yeah.
For those that are still working, I think subscribing to the right issue may not be any much challenge for them But for retiree, it will be one of the challenge in that.
I see. So that's why for retirement it's not it's not it's not easy for them to decide for this rights issue. Okay, so Darren, you have an upcoming workshop. Okay, can you just share a little bit on this upcoming lifetime income mastery workshop
Actually, I run a lifetime income mastery workshop since 2017. Okay, it's actually running it for more than 3 years. Actually, it's more of the teaching people how to build a multi-asset portfolio. We always talk about multi-asset portfolio. A lot of people say they want passive income. But passive income can be from multiple sources. Okay, it can be from investment source, but investment source to take note that it is not perpetual in aspect. That's like this. Now there's a market crash, your dividend may suffer. That's like a lot of REITs have cut their dividend drastically, okay, so that they have more cash flow. So for those who have a big risk portfolio for retirement, and it practically depend on their income, then you may face some challenges lately. So when you talk about planning for multi-asset portfolio, we also look at some of the guaranteed-based income you need to have. Okay, one of the common one will be the CPF life, and how can you better make use of the CPF side to build a multi-asset portfolio. So this course actually to teach you how to be a holistic view to build a multi-asset income, come up with a list of stocks you want to buy, a REITs you want to buy, unit trust you want to buy, and what are the retirement plan or how you can maximize your CPF life. So that's what this 2 full day course teach about.
I see. So what's the people always ask about the cost of the workshop and how do they sign up, things like that.
This course actually is a IBF approved course.
Okay.
For those not aware what is IBF, IBF is an Institute of Banking and Finance. It is directly under MAS. Okay. So IBF approved course means what? Indirectly there's IBF funding. Indirectly there's government funding for this course. And due to the COVID-19 situation, the government have changed the funding to make it even better. Is they pre-fund 95% of the cost fee for those that want to sign up this course. Okay, so that means you only need to come up 5% to pay for the cost fee. The cost fee, and which is actually only $62.40.
Okay.
After attending finish, and this 5% cost fee, you can use your skill future to pay the 5% if you have the skill future. Okay, and after attending finish the course for Singapore and PR, there's also a training grant given to you.
I see.
By the IBF.
Okay, so how can they sign up for this preview or sign up for this this course? Yeah.
Okay, they want to sign up. You may just need to go to our website. Okay, there's below there's a wealthhero.com.sg/LMN courses. You click on it. You'll link you to the information, and from there you can sign up on that.
Okay. So thank you. Okay, thank you very much. Okay, so I hope you have enjoyed this session. I hope we have give you some values in this video. So remember to like and subscribe our YouTube channel. Okay, and thank you very much, Darren. And
Okay, thank you.
okay, thank you, everyone.